Chapter Group Audits. Important notes. A parent company, holding company, along with its own FS, have to prepare FS of its subsidiary in the same manner as that of its own, as per Section 129. Subsidiaries will also include joint venture and associates. Company shall also attach along with its FS a separate statement containing salient features of FS of its subsidiary in Form AOC 1, Accounts of Company. If a company is a subsidiary by virtue of shareholding and the same company is subsidiary because of company control over board, then both the companies will prepare CFS. Example, AB holds 50% stake in Baby Limited and SRK Limited holds half of the board of Baby Limited, then both AB and SRK shall have to prepare CFS. Examples of exemptions from CFS under Ind AS. As per Ind AS 110, an investment entity shall not consolidate its subsidiaries. Instead, it shall measure it at fair value through P&L account as per Ind AS 109. However, its parents shall consolidate all entities that it controls, including those controlled through an investment entity subsidiary, unless parent itself is an investment entity. So exemption from CFS under Ind AS is as per Ind AS 110 for investment entity. Then exemption from consolidation under Companies Act. First was under Ind AS, second is as per Companies Act. So there are three. A is Dadaji, B is Papa, C is Beta. So B will not prepare CFS in all three conditions if all three conditions are satisfied. First, no objection clause from all members or one member is received. The company is not listed company and not wanting to get listed, and ultimate holding company prepares CFS. Then such company shall be exempt from consolidation under Companies Act. Explain types of consolidation adjustments. Preparation of CFS gives rise to two types of adjustments: PCA, CPCA. PCA is permanent consolidation adjustment, CPCA is current period consolidation adjustment. PCA, the mnemonic is ECG. These are those types of adjustments which are made on first occasion or subsequent occasion in which there is a change in the shareholding already held. ECG, E for determination of amount of equity attributable to minority or NCI. Then CG is determination of capital reserve or goodwill as per applicable AS. The auditor should verify that pre-acquisition reserves have been allocated properly between the parent and NCI. Second type of adjustment is CPCA. These are the adjustments which are made in the year for which the consolidation is done. The mnemonic is IF PAIS, IF PAIS to E2. Following are the adjustments. I for intragroup interest paid and interest received. F for foreign component, that is gap conversion wherever applicable. P intragroup profits on asset acquisition. A is adjustment relating to harmonizing accounting policies. I is intragroup indebtedness. S is adjustment for subsequent events, that is after balance sheet date but before audit report date. Adjustment for significant transaction between the date of component and date of parent. E is determination of equity attributable to minority or NCI. Next, fourth question, what is the responsibility of parent company? Identifying components including the financial information of the component. Identify reportable segment for segment reporting. Identify related party and related party transactions. Obtain accurate and complete financial information from components, making appropriate consolidation adjustment. Harmonize accounting policies. Gap conversion wherever applicable. Next question, what are the responsibilities of parent auditor while auditing the CFS? He should validate the requirements for preparation of CFS. Next, he should satisfy himself the CFS have been prepared as per applicable FRF. Next, he should enable himself to express opinion, that is, CFS is giving true and fair view. Next, he should inquire into the matters as per Section 143(1) of Companies Act 2013. Next, he should report on the matters under Section 143(3) of Companies Act 2013. Sixth question, what specific procedures to be followed by the auditor in respect of completeness of information received from management with respect to CFS? Special procedure in respect with completeness of information. Answer is following are the procedures. The trick here is ISCA PJ works. I for review investment of parent as well as its components. S for review statutory records. C for identify changes in shareholding. A for review other arrangements. P for review parents procedure for identification of various components. J is review joint venture and joint arrangement. The works is review working papers for the prior year for known components. Also make inquiries of management to identify new components. Question 7. How as an auditor you will report in CFS? When parent and component auditor is same, first case, then check compliance of applicable AS, Ind AS, FRF and report on true and fair view of consol balance sheet, consol P&L, consol cash inflows and consol cash outflows. Second case, when parent auditor and component auditor is different. Parent auditor will state division of responsibility by giving percentage and amount of sale or sales, assets, cash flows, and division of responsibility is not construed as a ground for qualification. When accounting framework differs, next case, if component follows group accounting policy, auditor to decide to rely on local auditor of component. If conversion entries are passed, auditor will verify conversion entries. When auditing framework differs, follow Indian generally accepted auditing standards. When component is not audited and is material, auditor to modify audit report as per SC 705, consider both qualitative and quantitative factors. Question 8. Use of materiality in CFS. The auditor is required to compute materiality for the group as a whole. This materiality should be used to check the appropriateness of consol adjustments, that is PCA and CPCA. The parent auditor can use the materiality computed on the ground level to determine whether the particular components FS are material to the group. For each component, he should communicate the same to the component auditor. The parent auditor should also obtain certain confirmations from component auditor like independence, code of ethics, disclosure requirements, etc. While considering the observations, example, modification, EOM or OM of the component auditor in his report, the parent auditor shall comply with the requirements of SS 600, that is, using the work of another auditor. Therefore, materiality would be considered while considering the observation of the component auditor. Question number 9. What representation should be obtained by the parent auditor while auditing the CFS? Representations should be obtained by parent auditor. First, he should obtain from the parent's management that written representation stating that CFS is prepared as per applicable FRF, acknowledging its responsibility, management's responsibility for the true and fair representation of CFS. Example of such representation includes completeness of components included in CFS, identification of reportable segments for segment reporting, identification of related party transaction, appropriateness and completeness of consol adjustments. Question 10. What are the disclosures which are given in separate FS but not included in CFS? Source from which bonus shares are issued, unutilized monies of issue, disclosure under MSME Act 2006, value of imports calculated on CIF from raw material components and capital goods, value of import of raw materials, spare parts and components, expenditure in foreign currency for royalty, know-how, professional fees, earning in foreign currency for royalty, know-how, professional fees. What are the audit procedures in case of changes in components? Refer question 14 main book of AB. Question number 12. What are the factors to be considered by principal auditor before accepting engagement of mnemonic is KARM, KARM. K for the principal auditor's degree of knowledge regarding business of components. Next is A. The performance of additional procedures as set out in SA 600 regarding components audited by other auditor. R. The risk of material misstatement in the financial information of components audited by other auditor. M. Materiality of the portion of financial information. KARM, K for knowledge, A for additional procedure, R for risk of material misstatement, M for materiality. Question 13. There should be sufficient liaison between PA and A. Explain. The PA may issue written communication to other auditor. The A, knowing the context in which his work shall be used, should coordinate with PA. PA should advise to A regarding STAR. S is significant accounting, auditing, reporting requirements. T is timetable for completion of audit. A is area requiring special consideration. R is use of his report. Next, the PA may require R to answer a detailed questionnaire. The R should respond to such questionnaire on timely basis. Reporting requirements in case of CFS. Next, question number 14. If PA cannot use the work of A and unable to obtain sufficient appropriate audit evidence and the evidence is material and pervasive, then he shall give disclaimer of opinion. If material and not pervasive, then he shall qualify. If he is unable to perform additional procedure, then material and pervasive, then he will give adverse. If material and not pervasive, he will give qualifying. Question number 15. Explain division of responsibility in auditing the consolidation. The PA should not be responsible for the work of other auditor. He shall clearly state the division of responsibility by indicating financial information of components audited by A. He should state this division in Om para as per SA 706. Division of responsibility cannot be construed as a ground for qualification. Chapter over.